Hey everyone, welcome back to the channel. If you're worried about the stock market and if it's looking like it's going to crash to you, you're not alone. Today we're going to be diving into some key data points, some expert insights, and what you need to know to protect your portfolio as we go forward. But before I jump into it, I do want to give a couple shout outs. Shout out to my little sister, Sean. It's her birthday today. I just want to say happy birthday. I hope you're having a good one. Really thinking about you. It's been too long since I've seen you, but I love you. Hope you're having a good one. And to my granddaughter Jada, she'll be having her second birthday in a couple of days. So early birthday to you. Happy birthday. Love you, Jada. And let's go ahead and dig into it. First, let's look at the market, the overall market. We saw last week or this past week, the S&P 500 showed some increased volatility, right? It dropped about 0.84% over these past 5 days. And really just kind of showed some volatility. It did have an update on Friday, which was good, but overall, it dropped during the week. We had actually 5 days consecutive losses in the S&P 500. And then looking at the Dow, it's also, often looked as a benchmark for the broader market, and the Dow was also down 1.14% over the past week as well. So it is actually signaling a little bit of an economic slowdown. If we look at these two segments here, and what we saw in the market last week. So I also want to talk a little bit about some of the economic data. So we look at some of the hot topics here. One of the ones was the Consumer Price Index, or the CPI report, and it did show an increase of 0.3% month over month in November. So that was the most we've seen since April, and slightly above October's 0.2% increase, and in line with what market expectations were, right? We've kind of been expecting that inflation was going to start to increase a little bit, and we actually see that kind of bear out in the numbers that we saw here. So on top of that, the jobless claims in the U.S. actually went down. So it dropped 9,000 from the previous week down to 211,000. Or contrasted sharply with what was expected, right? So it was expected to increase. We were expecting to see jobs or jobless claims increase, but we actually did see them decrease over that past week, which gives us the lowest claims in the last 8 months. So we're looking at that. The jobless claims actually look to be getting a little bit better. So unemployment right now is currently at 4.2%, which is a slight increase over the previous month rate of 4.1%, and higher than the 3.7% rate from the previous year. So we are seeing, even though we did see a slight decrease over the past week, overall it is up, and we're seeing unemployment kind of creep up as well. So those are some factors to look at as well. We got the CPI report. Inflation is going to be a big thing moving forward. Job reports are going to be big as we continue to look at data and kind of see what the economy is doing. And next I want to talk about what the Fed is doing, right? So we always talk about the Fed. That's something that's been really big over the past few years with inflation, and just kind of seeing Jerome Powell's announcements and what he's going to do with the rates. If you remember, his last meeting, he actually did cut rates by 0.25%, lowering the rate range from about 4.25 to 4.5% from where it was. As we continue to see inflation go up, we could see the Fed change his mind and stop dropping and actually start to increase interest rates again, which we know from previous, situations when he was raising interest rates that had a big impact on the market. We saw a lot of stocks dropping, and really the overall market drop. So we want to stay on top of that, and be looking forward to his next announcements, which is scheduled for January 28th or 29th, and will kind of give us some more updates on the future of interest rates. So be looking for that. Next thing I want to talk about is kind of the geopolitical tensions, things that are going on around the world that also impact the market. We have tensions between the United States and China over trade policies and technology access, and they continue to escalate. So we see that that's kind of going to, depending on how that story turns out, that could impact the market. There's rising concerns about the situation in Eastern Europe with Russia's involvement in Ukraine. That's also causing global uncertainty. Meanwhile, we have tensions in the Middle East between Iran and other Gulf countries, and that also is kind of showing some instability. So all of these things, these tensions can impact the market. They can impact global supply chains, energy prices, and other things, which really will, have an impact on investor confidence. So that's why we kind of want to look at this. We always know that the market does not like uncertainty, and when we have tensions across the world, that can drive uncertainty, especially in the market. So if we look at some things, energy prices have already kind of shown some volatility with oil trading at 75 per barrel. This was influenced by some of these factors. And when tensions rise, it can create, fear about disruptions in global trade, critical sectors like oil, gas, and things like that. So these are some things that investors need to, really pay attention to. And you could see some market fluctuations, if any of these things get a little bit more volatile, or there's, some things that kind of, pop off between some of these countries here. So want to keep an eye on that. And just kind of looking at what some of the experts are saying. You have some analysts from Goldman Sachs and JP Morgan. They predict that if inflation persists and goes above, or persists above 4%, meaning stays above 4%, the markets can see another correction of about 10%, right? So if these things continue to go in the same direction, like I talked about before, if the Fed comes out and says they're going to start, changing their mind on what they're doing with interest rates, we could, see a correction, right? So we want to be, prepared for that. And on the other hand, there are some experts that are bullish, right? Morgan Stanley and BlackRock believe that if we have strong earnings in the tech sector, that the market could stay afloat, right? So that just kind of leads me to, some of the things that we do, some of the takeaways you can have from this meeting, and really some things that you can do to prepare yourself and make sure that you're ready to move forward no matter what happens in the market. So first things first is we cannot control the market. And I tell people this all the time. I could want the market to go up and put my money in and pray and do anything that, but we can't control the market, right? There's the market is going to do what it wants to do. And what we have to do as investors and traders is we have to understand how to enter the market in a way that's going to benefit us depending on what the market is doing. So we want to understand what's going on in the market. That's why it's good to always understand kind of what's going on within the market, also outside of the market. You want to diversify your portfolio and hedge against market volatility. So that's something I'm sure you've heard, but I want to take that a step further, right? Know what you're investing in, right? Know the companies inside and out. Understand, where they are in terms of their vertical. Are they the top of the market? Are they the market leader? Know what their earnings are looking like, right? What are they bringing in month over month? What does the top line look like? What does the bottom line look like? What are their top products and how are they doing in the market? So make sure, that you're staying on top of the different sectors that you're invested in, but really the specific companies that you're invested in. So you understand what's going on. You understand if you need to make moves, and if things are changing, you're prepared to go ahead and make changes with how you're investing and what you're investing in. So second thing is, keep an eye on upcoming economic reports. We talked about the CPI report. That's a big one. Some other things that are going to be coming out. Also, the Fed chair, what Jerome decides to do with interest rates. Those are going to be big things as we move forward. We want to make sure we're keeping an eye on inflation, keeping an eye on those interest rates because they will impact the market. And then the last thing, avoid making emotional decisions, right? So hopefully if you saw this video, you didn't go right to your account and start selling everything. We don't want to make emotional decisions. We want to make educated decisions. So that goes back to what I was saying earlier. Make sure you know what you're investing in. Make sure you understand what's going on in the market. Make sure you know what's going on externally to the market that could cause changes in the market. And that'll keep you in good situations where you can, continue to move forward and really understand which direction the market is going, right? We want to know if the market is going up, down, or sideways, and then we want to act appropriately, right? We talk about different ways to enter the market here. When the market is bullish, we like our volatility trading. That gives us the ability to take advantage of a market that's running. We like cover calls here. You can do those in upward moving markets, stagnant markets. And then if the market is going down, we like our bear call spreads, right? That gives us a way to enter into the market when the market is going down, take advantage of that. And it keeps us from putting ourselves at a lot of risk if the market is going down. So those are some of the things we do here. If you do, want some more coaching or want someone to kind of, talk this over with, take a look at the link below. We're going to put a link in the comments here where you can actually book a call with Courtney and I. We can talk a little bit more about what the Flex Financial approach is and how we attack the market. So that's going to wrap it up for today. If you did like the video, give us a thumbs up. Go ahead and hit that subscribe button. Check out some of our future content. And also leave a comment. Let us know what you think. If there's anything you're looking at in the market, things that are top of mind for you, or if you have any questions, let us know as well. And we'll catch you on the next one. Have a good one.